Bed Bath & Beyond stock is down nearly 10% today, but is still up more than 100% year to date. This morning, it came out that the store is talking with its creditors about filing for Chapter 11 bankruptcy. Chapter 11 bankruptcy provides for restructuring, typically done through a corporation or partnership. A Chapter 11 debtor typically presents a reorganization plan to keep its business running and pay creditors over time. These discussions include the prospect of a horse bid, in which a lender offers to buy some or all of Bed Bath & Beyond's assets in a bankruptcy auction by making a low-range bid. However, Reuters reported that the corporation is discussing selling its assets with Sycamore partners. Bed Bath & Beyond's chain of BBBY baby stores would be included in the sale. In the past month, the company has sent out a going concern warning and said it would investigate all ways to get back on track financially. It also disclosed third-quarter earnings, which were lower than expected. Bed Bath & Beyond announced a net loss of $393 million on sales of $1.259 billion, a 33% decrease year over year. According to Barron's, as of December 30, BBBY stock had a short interest of 50.27% as a percentage of float. BBBY shares are presently down today, raising the question, is the short squeeze over? Several fundamental factors could contribute to an increase in the price of BBBY shares in addition to a short squeeze. Since the year 2020, private investors have shown a greater interest in enterprises that are in the process of closing their doors. This could be due to the possibility of a buyout or the result of a white knight investor swooping in to save the day. This can also be linked to the low prices offered by businesses that are about to go bankrupt or have already done so. For example, Bath & Beyond could change its fees in 2018 like Sears did when it went bankrupt. Before the company's shares were pulled from circulation on the market, they experienced 4 separate increases of 100%. As a result, it is impossible to determine whether the BBBY short squeeze has reached its apex. Bed Bath & Beyond is now dealing with several problems, and the only viable alternative is to declare bankruptcy. A private equity firm or a bank may step in to save the day, but for this to occur, Bed Bath & Beyond will likely have to liquidate certain assets or entirely restructure the business. With a significant revision or a lending miracle, it will likely continue to exist in its current form as time goes on. However, investors should prepare for further market volatility in the coming weeks as the company works to complete the procedures required to file for bankruptcy. According to Tom Young, an analyst at InvestorPlace, Bed Bath & Beyond's share price would have to reach $25 before the retailer could raise sufficient capital to see it through the remainder of the year. For more information about the BBBY stock, click on the video you see on your screen to watch more.